In the currency quadrant, the March euro currency future has now rallied for 3 straight sessions for a total price jump of 1.82%, and it's rallied for the third week in the last 5. And this week's rally was for a total of 1.54%. Since the recent low during the week of January 13th, the euro has now rallied almost 3%. The low today, 1.0461 was actually a gap higher of about 10 basis points. So you can see that today was basically a straight up day. The high, 105.29, that was up 0.75%. And at the close, we're still up more than 0.5%. Today, we got some better than expected economic data out of the EU GDP data, and data in the US was a little bit weaker. That was the retail sales data. That type of data relationship should result in a stronger euro and a weaker dollar, which is what happened today. Employment change data year over year in the EU was slightly weaker, but their quarter over quarter GDP was positive and it was expected to be flat. So that was a very pleasant surprise. Their year over year GDP was equal to the last release, so no weakness there either, and that was stronger than expected. Conversely, US retail sales dropped by 0.9% and was only expected to have dropped by 0.2%. And manufacturing production dropped as well. So those data points contrasting each other pointed to a stronger euro. Also, in the US, we have FOMC uncertainty. Market forces seem to have no consensus on the path of the US Fed currently. Now, next week, we do get the Fed minutes. Maybe that clears it up. But when you look at the probabilities for the Fed funds rate, add the CME Fed Watch tool, that's where I'm getting this information from, out to the end of 2026, there are now 3 cuts through July of 2026, then a hike through October of 2026, then a 50 basis point rate cut in December of 2026. Now, these are probabilities based on the markets, and it's unlikely to play out that way, and the probabilities aren't that high, but it illustrates the uncertainty on the direction of the FOMC, which points to a stronger euro and a weaker dollar.